Netflix on the less. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel it's a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
Oh, hey! Before we talk about the video, Netflix got clapped! And I bought some. What? I did? What?
All right, ladies and gentlemen, yes, I did buy Netflix. That's why you get the free long-term alerts, so you'll never miss it. I bought it after hours, but we need to talk about what this earnings for Netflix means, and I have another warning for you. It's literally happening again. What happened with Snapchat a couple months ago after this Netflix report, it is absolutely huge, and what this is saying, it is a giant warning for anything discretionary related in tech, and we are watching the market repeat insanity. I don't know how any other way to put this for you. So I'm going to go through this story here. I'm going to explain to you what is going on and why it is so key. But literally, it all ties into even why the market went up today. So, all right, just hear me out. I got a bunch of stuff and I got to play $100 into 1,000. We're going to talk about it. But literally, let's start off with why the market went up today. Absolutely insane because this was hard to answer all day. Everybody kept asking and now here's the answer. They are saying because of the economic data. So home building, that came out very bullish the last couple days with jobless claims. Even from last week, the economic data has been good. Everybody on YouTube, they are saying recession. I know, I'm one of them. But I told you when, the yield curve. Stop playing with me, okay? But no, in all seriousness though, everybody's worried about recession. Economic data isn't showing that, but now here's the paradox. All of a sudden, Wall Street cares. So this is the chart. This is what Morgan Stanley, Goldman, a lot of analysts today, they put out notes and they're saying, well, a day like this where every industry moves up 1%, it's not because oil went down. They're saying this is responding to economic data. But what is the problem here? What I'm trying to show you is that when the market wants to respond to economic data, it will use it as something bullish. But what we've seen in the past, remember, when the economic data wasn't good, if the market was up, people are like, well, you know, market's up, we good, so we gonna follow the market. So it's an interesting paradox. Yes, I know, big money rug pull manipulation. This is just what it is. Don't underestimate the heartless S&P, bro. Come on. But in all seriousness now, this could explain what we saw today, but why I'm bringing this up, the exact same thing happened in October and November. So I'm going to get to that. But now what you really got to understand here, earnings season is about to get crazy. Netflix is literally down like what, 20% right now? If that is the first big tech earnings, I hope you realize we may start getting a lot of movement. Essentially, every stock doesn't have to go down, but the Grim Reaper is definitely showing up. He's already showing up twice on Netflix. So we're going to see what happens with Facebook or anything like that. But the point I'm trying to tell you here, we may see a repeat of last October, November, where some companies are really going to get a growth clap. Most of the companies will do good. Right now, there's been 79% of companies have reported a beat. But then what happened about a month and a half, 2 months later? The issues of today, well, the roosters, they came home to roost, as they would say. So this is why I'm bringing it up. Well, I'm not saying anything right here, right now. Literally, I'm just going to be focusing on earnings. There's going to be a lot of plays, but what I'm trying to tell you, what we are seeing with Netflix earnings and this signal now for anything discretionary related and related to tech and rates and all that, that is going to be the problem, and we may start seeing that come up here in a little bit. So Netflix, they did really bad. They reported a loss of 200,000 customers, their first ever loss on subscribers in a decade, and then they guided for 2 million more of a loss yesterday. So why am I bringing this up? Because this reminds me of this video here with Snapchat. So this is the story that I'm saying, because Snapchat, they sandbagged a couple months ago. They ended up doing good, but this is what they warned about. Remember, they were saying, oh, ad revenue, the high interest rates, all of this stuff. It led to things going down. But if you remember, none of the other stocks went down with Snapchat. It was Snapchat first, and then 1 quarter later, well, all of the companies pretty much caught up with Snapchat. So what I'm trying to tell you, this is happening again. I don't know why I'm clapping like a clam. Anyways, but just take a look at any of the earnings here now, because where we go from here, this is going to be important. What this is saying to consumer data or just even consumer discretionary stocks, and now how people are responding with economic data. This may be the narrative for the next month or so until we get any more updates, but this is huge. And now we need to see, where's the Grim Reaper going to show up? Who is the next company that is going to get clapped? And now the issues brought up for earnings today, when will they affect everybody else? So take this as a signal. That was very good. But again, today, besides all of that, oil went down, and this was the number one headline. This is why we went up. People are saying that the stock bulls have gotten a relief from hot data. Economic data was good. It is getting rid of this idea that we're dealing with a recession, but this is all that happened today. Again, today was very weird. The rally was just straight up in the morning. Then we stayed pinned, very earnings-esque as we talked about yesterday. But now everybody's waiting for earnings. The consumer, the bank stocks, those weren't bad. We're going to watch this stuff individually, but now where we go, it is getting pretty clear up until Powell on Thursday. I mean, earnings is going to dominate, and where we go from there, well, we will see what happens. But my camera ran out of battery, so we're going to finish it here. The main thing for this week, again, today was very simple. Today was a very big hint. It is all going to be about earnings, and then Powell on Thursday, and those will be our main drivers, with a little bit of a side of commodities and all of that. So keep that in mind. But as far as the plays, the first one that I did here today, I grabbed an Alcoa. That says an $80 put. I grabbed a $100 put for May. I grabbed these at like $250 or so. You can see they moved down a little bit, only like a $10 move. Not too bad, if anything, like 10-15% on the play. But why I decided to go with this one, it is a pre-earnings play. And then with Alcoa, the key is trying to get closer to the money than not. Like I was saying yesterday, there's a lot of plays you could do that are very cheap, but Alcoa is a slow-moving stock, so even $100, it had a premium, but this one's still pretty far out the money. But I was like, okay, Alcoa opened up down. We got the earnings run up. Let's see what we could do. I grabbed one, but now here's the problem. If you've noticed, Alcoa, they've done pretty good, but if they start running down leading into the pre-earnings run up, hopefully it does not turn into a sell. But that's the first one. And now for this second play, this one is my favorite. I did do it on Robinhood, and I'll show you, but I want you to see it here on the option chart. I went with a PayPal debit spread, and this one is absolutely fire. Shout out to Moondog, baby. He emailed me this. He sent me one a little bit further out the money. I remixed the play, and I said, hey, I like this idea. We've talked about PayPal. This play has a lot of time. We're going out to June contracts, and it plays both the pre-earnings run up and then enough time to play it afterwards. And then on top of it, remember, we've played PayPal a couple of times. If you haven't seen them over the last few quarters, they've gotten absolutely wrecked. So hopefully one of these quarters will be the turnaround quarter, but we will see what happens. But as far as the play, I went with a debit spread, and I got the June 125 calls, and then I shorted the 130 calls, which left me paying about 59 cents per contract. So if you don't understand that, that is a debit spread. We buy the 125 and then short the 130. So I bought this for $215, sell this for $150, and since that's a $5 difference between the strike prices, that is $500 max gain per contract if the stock closes at 130 by the end of June or gets there before. So we grabbed two of them, $500 max gain on two contracts, spent about $100. That means max gain is around $1,000. If we end up failing, the most we could lose is $100. So this is why I like it, because it's about 30% out of the money. But you can see here, PayPal after earnings, it was actually at 140 just a couple of months ago. So I really like this. It's a pre-earnings play. It could cover for earnings, and just in general, we've been watching PayPal, but now debit spreads, they very well may be the answer here. We saw what we could do with butterflies. We've seen some of the credit spreads, but now with this premium environment, there may be some good opportunities. But at least for earnings, you're telling me I'm getting within like one or just outside of two standard deviations for the price of $50-$60. I am loving it. So those were the main plays. As far as everything else, just going to be riding anything else that we were in related to commodities and all that. Like we said, we did grab where was it, filled orders. I grabbed 4 shares of Netflix at $270 on the big long long term, not any of the other accounts, and that's just because I was liking it there. So I was like, all right, I think we could justify it a little bit here, but I will be looking at Netflix tomorrow. Again, I think this post-earnings continuation, they could go as low as 230 tomorrow, even lower. Just because I bought some for the long term does not mean I think it's over, but I was saying anything below 300, it went lower. I wanted to react. We'll see what happens with the conference call and all that, but at the end of the day here, I want to play this for pre-earnings. It is going to move around a lot. Again, we even have 2-day follow-ups. Everything is going to be about pre-earnings, post-earnings, and that's where a lot of our plays are going to be, so I hope you're ready. But that is your watch list, ladies and gentlemen. Make sure hydrate healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shine. I need your rumper. The occupied get chosen, baby. But the Cole loves you. I love you. We'll see you in the morning. Let's go.